Welcome to Nerdbull1669 Weekly Trading Outlook tips for the week of 12 January to 16 January 2026. So, Mark, before we delve into this week outlook and tips, right? Let's have a market summary for the week of 5th January to 9 January 2026. The theme for last week was actually the relief uh, rally, and rotation. So after a shaky start to the year, January 1st to 2nd trading day. So the first full week of 2026, right, actually saw a decisive return of the risk appetite. Investor actually shook off initial jitters to push major indices to a fresh record highs by 9 of January Friday. So the performance-wise, the week right was defined by a broad participation, while tech right, the Nasdaq actually recover up by 1.9%. The standout was actually the Dow Jones, which was up by 2.3%. So this signaling a rotation right, is actually into the real economy cyclicals, which actually referring to banks and industrial ahead of their earnings, which is happening starting from this week. So the S&P 500 actually added more up by 1.6%. So key drivers for last week, right, was the soft landing narrative was actually reinforced by resilience economic data, overpowering the concerns about elevated multiples. So for the sector watch, right, this week. So basically, watch banks, which Bank of America, JP Morgan is having the earnings starting from this week, and then also the transport side, Delta Airlines also saw the significant pre-earnings buying, and the forerunning the expectation of a strong consumer demand. Okay, so coming to this week, the market outlook for the week of January 12 to 16, 2026. So the theme right was actually earnings reality check. So the speculative phase of the rally ends now. The fundamental phase actually begins. So next week, okay, will be the first major test of the 2026 valuation, or actually starting from this week. So the catalyst, okay, the Q4 earnings seasons officially kick off. So the market needs to see margin expansion to justify, right, the current PE ratios that each of the banks and tax is having. And then also what is the risk? So the risk is with S&P 500 and Nasdaq at all-time high, the bar for success right is incredibly high. So good news may be so, which is profit taking, and then the bad news could be punished severely, and then we can see a volatility spike. So what should we be focusing? So watch for a divergence between the hardware AI, for example Nvidia, and then the software services AI, which is Alphabet, Google guidance. So appreciate, yeah, if you can share your thoughts and comments for this video, and do help to like and share, and then we really appreciate your help. Appreciate if you can like and share this video if you find this video useful and helpful for you. Thank you for your support, and we look forward to you supporting the channel for more content. So for the week of 12 to 16 January 2026, right, the macro landscape is actually defined by a regime of validation seeking. Market are fundamentally constructive, but then are pausing to verify if the soft landing plus the AI growth thesis right actually hold up against the incoming hard data, which is CPI, as well as the corporate reality, which is coming with the banks earning this week. Quite a few banks is having their earnings. So coming to the risk appetite, okay, it's cautiously constructive, which is like a week can see. Risk appetite remain positive but fragile. The January 1st rally momentum is transiting into a consolidation phase as traders await the first major reality check of 2026. So the key driver we could be seeing right is the AI and the tech trade remain the primary engine, and concentration risk is high. Investors are also looking for validation that valuation have not really outpaced reality. So for sentiment wise, right, optimism is supported by the belief that a global recession will be avoided. But there is nevertheless that a hot CPI print or a weak bank guidance could derail the early year gains. So the leading sector, be looking. I personally will be looking at the defense and the nuclear energy SMRs, and they are also They are actually seeing speculative flows due to the geopolitical shift and then the AI powered needs. So banks are in focus as bellwethers for the broader economy. So coming to the rate direction, it's biased lower but data dependent. So might be paused to pivot. So the market is actually pricing in a rate cut for 2026, but the Fed Reserve, right, is signaling a patience. So the tug of war, right, is between a market wanting a Q1 cut and a Fed waiting for inflation to hit 2% sustainably. So coming to the volatility regime, it's actually suppressed but coin. So VIX is actually around 15.5. The status like low volatility, mean reverting. The VIX, right, is currently hovering around 15.5, so indicating a lack of immediate panic, but not compliance. Uh, Below 12 would be then deemed compliance, complacent. Complacency. Now coming to the key calendar drivers for this week. So the strategic takeaway, right? The market is actually in a show me mode. So do not change the rally early in the week. So the best safe, right, is to wait for the CPI print to confirm the inflation trajectory. So I will be looking at the bull case, right, which will actually show us, the soft CPI plus a strong bank's earning. This will most likely signal a breakout to a new highs. So for the bears, right, if we have a hot CPI and the weak bank guidance, then that might be a sharp correction, which could be around 5 to 10% as the rate cut hopes a dash. So earnings seasons kick off this week. So major banks including JP Morgan Chase, Bank of America, Citigroup, Fargo's are slanted to report this week. So we could set the tone, right, for the broader Q4 earnings cycle. So Delta Airlines and selected industrial follow soon after, adding the sector dispersion and the cross market volatility. So Delta Airlines and JP Morgan is actually starting the earnings tomorrow, Tuesday, 13 Jan pre-market. So macro and other catalysts, which we mentioned earlier, the CPI data, retail sales, and the Fed commentary are on the calendar. This may potentially influence the risk asset valuation. Now coming to the weekly outlook for S&P 500. So the S&P 500 is in a bullish trend continuation mode. So having broke out of its earlier January consolidation. So the trend continuation above stands at approximately around 6,980 to 7,000. This would signal a further upside and validate the bullish momentum. So the pullback risk level, right? So a breakdown below 6,825 will risk a deeper correction towards the 6,700 support. So for the sentiments and catalyst influence, right? So quarterly earnings result, especially from the financials, could either reinforce the continuation of the upside or trigger volatility if the surprise actually disappoints. Okay, now coming to the weekly outlook for Nasdaq. So the immediate psychological high established on last Friday. Um, so we actually saw it holding above. So anything that holding above this, right, will signal the AI trade is still is still the primary, so the engine. So coming to the strength and the failure level. So strength above 23,800 to 24,000. If can sustain close above 23,800 to 24,000, right? This is a psychological and technical zone. This will favor a continuation of the tech rally. So a failure below the 23,200 to down to 23,000, right? A break and follow through below this level would actually increase the pullback risk and signal a short-term negative diversion. So now coming to the weekly level, looking at NVDA. So NVDA has actually been consolidating, patterning around the 181 range, while other big tech, right, rallies. So this is calling actually for a move. So coming to the bullish buyers, right, we're actually looking at above 185, and a sustained break right above this consolidation roof, right, will trigger a bull run towards the 195 to 200 level. So invalidation, which is coming to the bearish um, signal, so below 175, a loss of this short term support, right, would actually put the 165 zone in play. So what will be the strategy like this week? So watch for volume. If the breakout lacks volume, then I would say that it is a trap. So now coming to the weekly levels for Alphabet Google, GOOGL. So this is the strongest of the Mac 7 recently, hitting all times high around the 130, 260s level on the AI sovereign urgency, the and the dominance. So we are looking at a bullish bias, which is above the 365 level. Continue momentum target the analyst upgrade zone of the 370 level. So invalidation signaling a bullish downside. This will be coming from the below $340. A drop below this level was previously resistance turn support. Suggests that exhaustion, and this could and also a sell the news rotation. So what we should we be looking out for? I think we need to look up for any regulatory headlines which remain the primary cyclical risk. Now coming to the weekly levels for Bank of America (BAC). So strong pre-earnings run, which is very positive, went up by 24% in 2025. Currently sitting around $55.85 for the stock price. So the expected reporting earnings is coming up in 14 January, Wednesday. So we are looking at for the bullish buyers, right? We're looking above the $56.50 level. So a post earning pop holding above this level, right, should clear the path towards $60. So look for comments on the net interest income stability, and also for the invalidation, the bearish signal, anything below $54, right, a gap down below $54 should signal the market dislike the forward guidance on the loan defaults. So now coming to the weekly level for Delta Airlines, DAL. So it's currently trading at a new near the 52 weeks high, around $72.31, with earning expected 13th of January, Tuesday, which is tomorrow, pre-market. So Goldman actually raised the target to $77. So for the bullish buyers, right, I'm looking at above $73. So it need to actually clear this 52 weeks high level, which sits at $73.16 decisively on the earnings volume. So target, we're looking at $77 to $78. So invalidation bearish signal, anything going below $71. This is the immediate support shelf. A break below opens a gap fill to $67.80. So what are the key metrics? So watch the unit revenue, RASM guidance for 2026. This will indicate the trend, right, for the entire travel sector. So here's the summary tables trade level. So the summary tables actually show the potential trades level, right, that I'll be planning for SPX, S&P 500, NVIDIA, NVDA, Google, Alphabet, Bank of America, and Delta Airlines, as I already hold NVIDIA, Google, and Bank of America, as well as Delta Airlines. I'll be planning to make some options play for this stock. So do stay tuned while I shall share it if I were to trade any of these stocks using the options this week. So a bit of the risk management framework. So these are the three things that we should always keep in mind. So trade levels are not the opinion, and we should define the invalidation before we entry, and then also reduce size during the consolidation. Do practice discipline and patience with. So this video is actually for educational content only and it's not financial advice. So the disclaimer, so the analysis and the result right, as you presented does not recommend or suggest any investings in the state stock. So this is purely for analysis purposes.